Hi there, good afternoon. This is the Mutual Fund Corner. I'm Bangla Malu. With me in the Mutual Fund Corner is Sumaira Abdi. Like all Tuesdays and Thursdays, we answer all your mutual fund related queries, equip you to create wealth by benefiting from the magic of compounding. But before we do that, a look at the markets. We're sitting at the lowest level of this series so far. For three times we had some support come by on the Nifty at 10,150. That wasn't the case to be. After a bit of a recovery today that was swiftly sold into, we're seeing exaggerated cuts. The fact that European markets are not doing well, as well as the Asian markets did not end well, and the US futures are showing a bit of a decline, is causing further worries. The stocks that are losing steam as we speak, we have Hindalco, which is down about 3%. ICICI Bank is causing the maximum damage on the frontline index, along with SBI as well, which is trading closer to the lower end of today's trading range. Reliance has lost almost 5-6% this week, 17% this month. That is also causing a bit of strain on the frontline index. And the latest entrance to the losers list at the low point of the day, we have Bajaj Finance. The results were expected to be blockbuster: 54% growth in consolidated net profit, 36% growth in asset under management. And after that, we're seeing some bit of a sell-off on the stock, perhaps post numbers. So we will keep an eye out on individual stocks and markets. But first up, all the top stories that answer all your mutual fund related queries. Market near the low point of the day, weak in line with global peers. IT stocks and Asian paints under pressure. HDFC alone batting for the bulls. Mid-cap index too lags. The Asian paints stock hits a 7-month low post a top-down miss in the second quarter numbers. Management remains cautious on demand and input costs for the third quarter. The entire paints sector loses color. IndusInd Bank's Romesh Sopti tells CNBC TV18 that the quantum of the IL&FS haircut will depend on the resolution. Adds that loans to NBFC and real estate, as well as the gems and jewellery sector, continue to be serviced. There's no cheer in the auto sector this festive season. Dealers say demand has fallen 10 to 15% from last Diwali. Fresh bookings too have fallen by over 20% across categories. There's a crucial Reserve Bank meeting today in the backdrop of the liquidity crisis which is gripping the debt market. The RBI likely to discuss relaxation in prompt corrective action norms as well as the payments regulator. With that, we hand it over to Sumaira. Sumaira, you have a guest with you.
Thanks very much for that, Mangalam. I have Vishal Dhawan of Plan Ahead Wealth Advisors who joins in this afternoon to answer all our queries. Hi, Vishal. Good to see you after a very long time. And what a tumultuous time in Spain. But, you know, despite all the volatility that we've seen in the market, there has been no letdown in the spate of NFOs that are being launched. And you name it. I mean, you have small cap funds which are being launched. Of course, there's a plethora of FMPs doing the rounds. But, you know, one specifically which caught my attention was the Mahindra Rural Bharat and the Consumption Yojana Fund that has been launched. What's your take on the current spate of, the NFOs which are now open? Are any of them something that you're recommending your clients to subscribe to?
Well, in general, we tend to avoid doing NFOs because of the fact of, there being limited track records. Having said that, it's an interesting time because you have a lot of NFOs, but you've also had one NFO actually being scaled back because of, possibly lack of demand because it was focused on financial services. And that's been one of those areas which has got hit very hard, especially the NBFC side. So on this particular scheme, which is, the rural and consumption story, first of all, it is the second kind of fund which is coming out on the same side. There was one earlier from Sundaram which continues to be there. It's been there for about 10 years now. And our view is that if and when you actually do want to go into any of these opportunities, you much prefer to first of all build your portfolio through diversified funds. We do find that a lot of these themes come and go. And a lot of the reason why rural and consumption was so powerful was driven around a monsoon. And if you look at how the monsoon finally ended, it actually ended about 9% less than normal. So from a point where you looked like you're going to have a really good monsoon, you actually ended up, being just about normal at the end of it. So our view is, while it's good to look at rural, there is an MSP increase play, there is, the whole consumption that happens around elections that kind of comes in. We just think that it's a good idea for investors to avoid thematic plays because they come and go very quickly. And most investors are not quick enough to get in and get out at the same time. And therefore, we'd say that, even though there's a Sundaram already in place or there's a Mahindra now come in, I think investors need to be fairly careful about putting thematic stories into their portfolios.
All right, that makes sense. And should one want to include it, perhaps only a very small allocation. But nevertheless, there is, a whole lot. There are 2 small cap funds which are currently, the NFOs are open. There's a focused equity. There's also a next index fund, that's the DSP BFSI. Any of these which find favor with you?
So again, the whole thing about small caps is that, when you look at the amount of returns that got generated in 2017 of small caps, you tended to find that a lot of investors wanted to put money there. And their experience in 2018 has been very, very disappointing, to say the least. So our view is, if you're going to go into small caps, if you're going to go into, funds in that category, then ideally you want to go into funds with track records. You want to go into funds where there is, a manager who's demonstrated his performance. And last but not the least, you want to see how expenses can be controlled. Because one of the things around investing has been that as managers try to find it harder and harder to make money for investors, the difference in expenses is going to make a big difference. So all in all, our sense is, while there are lots of these options which are available, investors may want to be very careful about how they come in. And also, if they're coming in at all, ideally they need to come in through SIPs and STPs to ensure that they get the benefit of averaging on the portfolio.
All right, let's invite some viewers then. We have a query coming in from Tejas Chandan. He's on the line with us from Mumbai. Hi, Tejas. How can we help you? Okay, I think we're unable to connect that line, but let me just read out his query. He's 24 years old. He's a student. He wants to do an SIP of 50,000 rupees a month. So I wonder if that's his pocket money. But anyway, he wants to invest it for a period of 10 years. So he wants to know how he should actually go about building his portfolio. So this is the best kind of query that we get, right, Vishal? There's a decent, amount principal to be invested. He's young. He's, want to stay in for the long term. So this is almost like a blank check. What would you tell him?
Absolutely. I think it's wonderful to see how, the penetration of mutual funds has meant that people are now really thinking long term. I think there are probably one of the challenges with a 50,000 rupee per month kind of number is many times investors end up buying too many schemes in their portfolio because they keep trying to diversify the portfolio and therefore end up having, 7, 8, 10 schemes. Our view is ideally about 3 schemes for a 50,000 rupees per month kind of SIP is a good option. Firstly, look at an index kind of fund. The reason why we keep recommending index funds is because India is getting harder and harder for active managers to beat. And therefore, you look at a low-cost index fund to basically give you large cap exposure and eliminate fund manager risk in terms of stock selection. So you look at about 40% going there. Look at a fund like the Parag Parikh long-term equity fund. Again, a fund which has built a good track record over the 5 years that it's been there. Gives you access to both a domestic and an international holding within the portfolio. Probably another 40%. And the third is because he's young, he can look at a mid-cap exposure coming through HDFC mid-cap opportunities as well, but to a smaller extent, probably to the tune of about 20%. So you essentially get 3 funds in there, put them into an SIP mode, and the critical part is to let that SIP just continue, because I think when markets go bad, there is this fear that comes in, especially when you look at a portfolio and you see it's negative, you want to stop your SIPs. And I think that's the worst thing that can happen, because that's what the concept of averaging is all about.
All right, so Tejas, you're just getting started. You've got a good portfolio construct that Vishal has advised you. And, I don't know if you've noticed, Tejas, but essentially you've chosen few stocks, right? So even though you have a kitty of 50,000 rupees a month, do not make a huge basket, an over-diversified set of fund portfolio for yourself. And importantly, stay invested. Up next, we have Mr. Bhavani Sankar, who's on the line with us from Hyderabad. Hi, Mr. Sankar. Good afternoon. How can we help you?
मैडम मार्केट नीचे आया ना, मैं अभी वो स्मॉल SBI स्मॉल कैप फंड में इन्वेस्ट सिप सिस्टम में इन्वेस्ट करने शुरू करने के लिए ये राइट टाइम है और टू वेट सम टाइम.
ओके, तो ये नया निवेश आप करना चाहते हैं?
नया मैडम, नया सिप सिस्टम में.
और आपके पास ऑलरेडी म्यूचुअल फंड पोर्टफोलियो है जो आप पहले से कर रहे हैं?
अभी तक कुछ भी नहीं है मैडम.
Okay. Vishal, first I'm going to request you if you can answer the query in Hindi. And, you know, actually what worries me is that we have a 40-year-old investor who wants to now start his investing career. One thing is good that, you know, he's seen the volatility, he's not scared, he wants to still begin, perhaps to take advantage of, you know, the NAVs at the moment, but he's chosen to begin the small cap way. I mean, is that the right strategy for him?
Well, absolutely not. I think, you know, it's very, very critical that you construct your portfolio right. जो आपका portfolio है वो आप ऐसा कीजिए कि जब आप शुरू कर रहे हैं तो आपको large cap funds जो बड़े companies में invest करती है वहाँ पे आप शुरू कीजिए. Small cap funds में issue क्या होता है कि जब market गिरता है तो ये बहुत ज़्यादा गिर जाते हैं और बहुत सारे investors जो हैं वो panic हो जाते हैं उस situation में. तो अगर आपके पास अलग अलग फंड्स ऑलरेडी हैं अपने पोर्टफोलियो में तो आप स्मॉल कैप का एक एक्सपोजर ले सकते हैं. SBI स्मॉल कैप फॉर एग्जांपल जो आप सोच रहे हैं वो स्कीम अच्छी है, लेकिन जो आप पहली बार निवेश करने वाले हैं उसके लिए SBI स्मॉल कैप आपके लिए अप्रोप्रिएट नहीं है. आइडियली आप या तो एक इंडेक्स फंड में शुरू कीजिए जहाँ पे आपको सबसे बड़ी जो 30 या 50 कंपनियाँ हैं वो आपको निवेश करने के लिए मिलेगी, या तो आप एक लार्ज कैप फंड लीजिए जिसका अच्छा ट्रैक रिकॉर्ड है जैसे कि ICICI फोकस्ड ब्लू चिप, और वहाँ पे इन्वेस्ट कीजिए. आप SBI स्मॉल कैप जैसे फंड बाद में देख सकते हैं जब आपका पोर्टफोलियो और जो आपका एक्सपीरियंस है वो थोड़ा ज़्यादा हो गया है.
ओके, भवानी जी, कोई और सवाल?
कुछ भी नहीं, थैंक यू मैडम.
Okay, all the best. Thanks so much.
Remember, the biggest loser on the Nifty is Asian Paints. Sister company similar to Asian Paints, similar input profile would be something like a Pidilite. That one's seeing a sharp sell-off as well, down about 7%. But in the interim, we got a few results as well as some stock-specific news. So Indian Metals and Ferroalloys, they came out with their numbers. There was a margin expansion of about 200 basis points, 12% as against 10%. Remember the management here telling us on CNBC TV18 that realizations in the first quarter had moved up, and add to that weaker currency would aid their margins. So volumes are something that we will keep an eye out on for that. We had another few numbers as well. SPIC reported a decent set of numbers, a sharp surge in their revenue as well as profitability. So that stock was higher by about 6% at one point in time and now has cooled off in the general scheme of things for the markets. There was some news on Cadila as well. So Zydus has got in a product approval coming in from their Ahmedabad facility. So that is an incremental positive for there. So they've got a final US FDA nod for clobazam tablets from that facility. So those were individual stocks, but we will go back to Sumaira, who is there with an expert to answer all your mutual fund related queries.
All right, Manglam, thanks very much for that. We have Vishal Dhawan here with us, and our next caller is through to us as well. Suraj is on the line with us from Bengaluru. Hi, Suraj. Good afternoon. How can we help you?
Yeah, hi. This is Suraj. Good afternoon. So my query is like I do a lot of research before investing in mutual funds. Basically, I look at how the fund managers will perform and what is the mutual funds performance with the last quarter and all the years. I'll take into account. So my basic question is, I have done my research and invested in the mutual fund. Like I have diversified my mutual funds into HDFC small cap, that is one. L&T mid cap is one. Parak Parik, which has the global opportunity as well. And the last one is on the Access Focus 25, that's a multi-cap fund. So based on the fund managers, I have diversified my portfolio. So I just wanted you to assess on how good is it, and I'm looking at the corpus of 1 crore for 10 years. So that is my question.
Okay, your corpus is 1 crore in 10 years or 2 crores?
No, 1 crore in 10 years, and okay. I can actually invest more with the SIP. My current amount is 2,000 per month, so I can increase it to even up to 5,000 per month going forward.
Okay, so I think one, of course, the fundamental thing is that the query we received said 2 crores in 10 years, which seemed, you know, a little too high. But 1 crore in 10 years, I'll let Vishal take the call on that. But otherwise, Suraj, congratulations on getting started and getting started right by researching, you know, your investments and actually linking them to a particular and concise goal. But Vishal, 1 crore in 10 years achievable, and is this the right vehicle that he's chosen?
Well, certainly the vehicle is perfect. I think getting to 1 crore in 5 years, in 10 years is possible. I think the discipline needs to continue to be able to put out that, 5,000 per scheme per month. So effectively, if we look at the number of schemes right now, at 4 of them, that's about 20,000 rupees a month that he's already doing, that he can potentially do. And I think that's a good number to work with. The important part here is to ensure that as the income keeps growing as well, the amount of SIP that's being put in also keeps increasing. So broadly, the 4 funds done on the basis of research is all good quality. There is a bit of international exposure also coming in through the Parag Parikh fund. I think what's probably missing is the need to be able to get some passive, low-cost investing into the portfolio through an index strategy. More and more data seems to indicate that active managers have started to struggle on beating benchmarks, especially on the large cap side. And we think that that will actually add a better, holistic nature to the portfolio if you end up actually enhancing exposure to an index fund. While there are multiple index funds around, look for a low-cost fund with a low tracking error. The UTI Nifty index, for example, is a good option to add into this portfolio, along with topping up into some of your existing SIPs. Just one more thing is avoid adding too many more funds into the portfolio. I think you've got 4. If you put in 1 index fund, you'll have 5. We think that's probably enough. You don't need to add a lot more. And you did mention that you research out every quarter. We think that's too frequent on mutual funds. Typically, look at your portfolio once in 6 months to a year. If something's not doing well, try to analyze why it's not doing well. Don't be in a hurry to change. Too many times we find that investors are trying to constantly churn around their portfolio, change things, etc. And that actually does a lot of damage. Let it stay. If you find underperformance, evaluate what's the cause for it. Let it still stay there for maybe a year after that underperformance to see if things are changing. And of course, track fund manager changes very closely, because a lot of the track record that you end up seeing is delivered by the fund manager. And when he's moving out, there is a different challenge to deal with as well.
All right, Suraj, I hope that answers your question. All the very best. Up next, a query comes in from Karthikeyan, who's written to us from Pune. So he's 31 years old. He's been doing an SIP of roughly about 50,000 odd. The goal that he has is his children's education, right, for which he wants to accumulate about 1.5 crores over the next 10 to 15 years. He has a certain fund selection, which is the Mirai Emerging Blue Chip, Axis Focus 25, HDFC Small Cap, Mirai Asset Tax Saving Fund, and I think he also has a Contra fund. I'm not sure which one it is. He has about 10,000 roughly in each of these, so he is investing almost 50,000. I don't know why he would have chosen a tax-saving fund in this, but nevertheless, Vishal, how does the portfolio look to you and what changes would you make?
So again, good to see that there are only 5 funds that isn't too diversified. That's a good trend that we're actually seeing here. Clearly, I think, the need for a tax planning fund in this kind of a portfolio looks kind of odd. But it's important to remember that a lot of investors tend to believe that if they buy funds which have a 3-year lock-in like ELSS funds do, then the fund manager actually outperforms. And the data that we've seen doesn't support that view. So ideally, we'd recommend that if you are investing long-term, you do want to invest in funds which are open-ended so that you can actually make changes if required. Don't want to lock yourself up in. So clearly, I think that fund is a fund that you need to stop your SIP in. And because you've got 4 other funds, including the Invesco Contra, for example, which has done extremely well, and the Mirai Emerging Blue Chip, our recommendation is you look at just topping up in both of them. You'll end up having 4 funds. Children's education goal, just track how you're doing towards that. And last but not the least, don't wait till the last minute to withdraw the money when your kid's going to go to college. Many a time we see people waiting too long, especially in bull markets, saying, you know what, I can save 1 term of fees by just staying invested because my portfolio will grow more. And alas, a lot of them actually see it go down. So I think 2-3 years before they actually require the money, they need to set up a systematic withdrawal plan to start moving that money out from equity into debt gradually, so that they're not going to end up in a situation where they've lost portfolio value in the process.
All right, Vishal, that's a useful point, and in fact, that's something that's easily forgotten by a lot of people. But thanks very much for joining in this afternoon and for helping answer all our viewer queries. We'll wrap up now, but keep your eye on the market. The index is back at the low point of the day. In fact, 10,100 looks like it could be tested. So we'll wrap up on MF Corner and toss it over to Closing Bell.